This is the Best Stocks to Buy podcast. We use our proprietary algorithms to screen, analyze, and rank over 6,000 stocks every week. This podcast is made possible by Connor Management Group, a registered investment advisor firm. If you've been enjoying these podcasts, we're sure you'll like our Saturday morning newsletter just as much, if not more. It is informative but light and includes personally curated articles on investing, money, and just plain leisure fun that we think you would enjoy. Just visit our website at www.connormg.com and click on newsletter to subscribe. All right, on to our presentation. Hi everyone, this is Mathis Connor with Connor Management Group, and this week we're going to look at the best small cap stock to buy right now. Today is Monday, July 6, 2015. And we see here on the opening slide that this company is in the communication equipment industry, and we see its 6-month upside potential at 29.2%. On to the next slide, and we see that the name of this company is called Polycom Incorporated. The ticker symbol is PLCM, and once again, they are in the communication equipment industry, and we see their 6-month upside potential at 29.2%. And on to the quick facts slide. Here's a business summary description for Polycom. Polycom develops and manufactures unified communication solutions. Also makes telepresence, video, voice, and infrastructure solutions. Solutions allow face-to-face collaboration without being in the same location. I think this is a fancy way of saying that they kind of make high-end conference call products, whether they're just voice conference call products or their video conference call products. Their website is www.polycom.com. That's Polycom. The company is headquartered in San Jose, California. They were founded in 1990, and they have 3,525 employees. On to the next slide is the products and services slide. What we have here is a picture of the Polycom logo, and we also have 3 additional photographs. One that says voice collaboration solutions, and it's just a picture of 3 people sitting around a conference room table with the Polycom device sitting there on the table for doing conference calls. The next photograph says get more done with the power of video, and it's 3 people sitting in a room talking to someone on a video conference call. And the third one says truly unified Microsoft collaboration, and it's a photo of 3 people in a room talking to multiple people on the monitor. There's panels of 6 different people. So that's what's on the products and services slide. On to the metrics slide. The annual revenue for Polycom over the last 12 months was $1.4 billion. This is a small cap company. The net income of the last 12 months was $67.3 million, and the cash from operations over the last 12 months was $217 million. The operating margins in 2014 were 11.9%, and in 2015, they're tracking to be 15.0%. So that is a significant increase and reflects some restructuring they were doing in 2014. The trailing PE ratio right now stands at 23.0, and the forward PE ratio stands at 17.3. So that relationship implies that analysts expect earnings to increase quite a bit over the next 12 months. The PEG ratio stands at 0.8. Anything at 1 or less is usually considered a value buying opportunity. The price to sales ratio stands at 1.1, not high. And the price to book ratio is also at 1.5, also not expensive. The enterprise value to EBITDA ratio stands at 7.0. The dividend yield is 0%. The company does not pay a dividend, so consequently, its average dividend payout ratio is also 0%. On to the next slide is the price chart for Polycom, and it shows its price over the past 12 months. And over the past 12 months, Polycom is down 15%. The stock, for the most part, had been trading in a pretty tight range from around $12.50 to just below $14 for most of the year. The stock has experienced a recent pullback from that range down to around $10.95, $11 right now. And that pullback happened just a few weeks ago, and it was from what we can tell, it was primarily due to one analyst believing that Polycom's numbers are not as solid as management is purporting them to be. So the company has experienced a strong pullback recently, around 10% plus. But we think their story is still good, and we think that this is a good buying opportunity. On to the next slide. The why now, the bull rationale. So these are reasons why we think Polycom is a good stock to buy right now. Basically, the company is experiencing increasing revenues per share, and that's expected to continue through 2016 as well. Similarly, they're experiencing decreasing expenses per share, and that's reflected in the increasing margins that we just talked about. So the combination of increasing revenues per share and decreasing expenses per share, we see that this will create low valuation metrics in the near future, and that will drive pressure on the stock to be purchased and therefore appreciate. So those are our reasons for why now is a good time to buy Polycom. Onto the summary slide. The financial statement quality for Polycom we consider to be good. The company has about $240 million in debt outstanding, and the profits for 2015 is tracking to be around $85 million and $90 million in 2016. So they can manage their debt based on the current outlook. The operating margin trend, as we mentioned, has increased. The price pattern trend has been declining, but we think that this just creates a good buying opportunity. And our overall market outlook is flat. Basically, we're seeing more overvalued names than undervalued names, but at the same time, the economy is still yielding good signs. So there may be a modest pullback, but we don't expect there to be a major pullback. The recent closing price for Polycom was $11.04, and our 6-month price target for the company is $14.26. So that gives the company a 6-month upside potential of 29.2%. So it's for all these reasons that we believe that Polycom Incorporated is the best small cap stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Bye. Just to close, remember that Connor Management Group is a registered investment advisor. In addition to being a source of quality stock investment reviews, we are money managers, not financial planners. Our sole goal is to grow our clients' savings and retirement accounts in a personalized manner as quickly as possible using one or more of our strategies. We can manage all or just part of your IRA account as well as a regular taxable account. Just visit us at www.connormg.com to review our service, or just give us a call at 281-947-2201. Have a great week.